Welcome, everyone. I'm Pete Rizzo, editor-at-large at Kraken, the best place to buy and sell Bitcoin, Ether, and other cryptocurrencies. And I'm your host for this special edition Kraken live stream. To discuss the state of Ethereum, I'm joined by Kevin Owocki, founder and chief roboticist at Gitcoin, an Ethereum-based platform for cryptocurrency project funding. Just last week, Kraken granted $150,000 to smart contracts that power Gitcoin to benefit its latest funding drive, Gitcoin grants round 8. So some highlights about that announcement. The grant marks Kraken's first ever donation to an Ethereum project. Grants will solely be dedicated to Gitcoin's Ethereum infrastructure tech category, which is designed to reward developers building Ethereum's essential software. And teams who meet their funding goals on Gitcoin will be eligible to receive a matching grant from Kraken. So once again, you can learn more about Kraken's commitment to open source developer grants on kraken.com. You can head on over to our grants page at kraken.com/features/grants. Now, welcome our guest, Kevin. Welcome to the show.
Hi, Pete. Thanks so much for having me, and thanks so much for supporting the Ethereum ecosystem.
Yeah, it was great to get involved. So let's dive in and talk a little bit about Gitcoin. I mean, I imagine there's a good amount of people watching or listening who, they hear open source platform for cryptocurrency project fundraising.
Yep,
Where did you get the idea? How did it start? And tell people what Gitcoin is.
for sure. So Gitcoin is a place that you could get coins. You can see what we did there with the name. If you're an open source software developer, and basically the insight is that open source software powers our digital infrastructure. The stat is actually $500 billion per year in economic value is created by open source software. That's before even the crypto ecosystem is filtered in. That study was done. And it's basically our digital infrastructure. Every time you start a new digital project, you're relying on open source software. And what we're trying to do with Gitcoin is provide a business model for open source software development, make it so that you can get coins in exchange for working for open source software. And that's what Gitcoin Grants is. It's basically a way for, if you're running an Ethereum project, if you're building core infrastructure in the Ethereum space, it's a way for you to raise money for the work that you're doing for open source software. And this is something that's really important because we're starting to see hundreds of billions of dollars of capital assets in these blockchain ecosystems. And it's really important that we're not building a castle in the sky. We want the digital infrastructure underneath your bags to be well supported, and we don't want to have potholes in our digital infrastructure. And so that's kind of what Gitcoin Grants is designed to do, is to financially support the people who are working on that infrastructure.
Mm-hmm. Yeah, and I think something that we just thought was super cool here at Kraken is that Gitcoin is built on the blockchain itself, right? So you're using Ethereum to help power Ethereum. Maybe you can or help fund Ethereum. How can tell people how that works, right? So when they make a grant, on Gitcoin, how are they doing that, and then how does that take place over the blockchain?
Yeah, sure. So we're using blockchain to fund blockchain infrastructure projects, which is kind of a fun dog fooding experience. And it's one of the use cases of blockchain that's not speculative at all. Our mission has always just been to grow and sustain open source software by using the blockchain. And so basically the way it works is you go to gitcoin.co/grants, and then you can press create grant. And what that will do is allow you to fill out some information about a project that you're working on and insert a blockchain address where you want to receive funding from the crowd. And we've got about 1,000 grants on Gitcoin Grants. And during the typical matching campaign, we run about a matching campaign every quarter. About 10,000 contributions will come in from the crowd to fund those projects. And it's all escrowed peer-to-peer on the blockchain. The nice thing about Gitcoin and the Ethereum blockchain is that Gitcoin never has to touch the funds. So as opposed to Patreon or Kickstarter, where they have an intermediary that's holding the funds for the grants, all of the funds are just escrowed peer-to-peer on chain. And Gitcoin is just kind of a website that helps connect the dots between the funder and the fundee. And so super proud of we're up to $4 million worth of funding through Gitcoin Grants over the last year and a half or so for Ethereum projects. And we're actually at the point where people can can earn their living off of Gitcoin grants and can just quit their corporate jobs and work on Ethereum infrastructure. And the nice thing about Gitcoin grants is that it's every quarter. Sustainability and repeatability is a key attribute of the Gitcoin grants ecosystem. And so, if you've reached a point in which you can pay your bills by working off of Gitcoin grants, you can expect that next quarter there'll be another matching campaign and you'll be able to re-up. And I think that repeatability is a really important thing, because if you're like me and you have a golden retriever in a house in the suburbs, you want to know that that funding is going to be there out in the future as well. So that's kind of like our strategy for supporting Ethereum infrastructure.
Cool. We'll definitely come back to Gitcoin and talk more about what we're doing with the grants. I wanted to shift a little bit to the changing narrative around Ethereum and just Ethereum within the general conversation about cryptocurrencies. So looks like heading into 2021, the mainstream narrative pretty dominated by this idea that Bitcoin now is a store of value asset. How would you describe how Ethereum fits in as people are coming in from the outside or hearing this from major publications and just the internet in general?
Yeah, for sure. Well, I'm a software engineer, and so you probably don't want to put me in front of the marketing department for Ethereum. But I think that clearly the narrative that took off in 2020 for Ethereum is DeFi, so decentralized finance. How do you basically use programmable money in order to create economic systems that are based on an immutable base layer, and basically you're creating coordination games using smart contracts. And the cool thing about that is no one's ever custodying your funds when the funds are escrowed into a smart contract. Now, there's also one of those great power, great responsibility things. I think it's incumbent upon the Ethereum ecosystem to make sure that all of those projects are audited and the smart contracts are secure and not going to lose any money or anything like that. We've clearly seen some sort of security problems with smart contracts in the Ethereum space. But if I had to sum it up, I'd say the predominant narrative in the Ethereum space is DeFi right now, and it's been neat to see that take off over the last year.
Mm-hmm. Yeah, I was going to say, because I think, the narrative that people, certainly that I talk to, my family members who are less involved in the space, they're seeing like these big investors buy millions of Bitcoin, right? Or they're putting big investments down. I think they're asking like where Ethereum fits in. Often, you hear that Ethereum is, like an internet or like an internet for money. Like, why does that analogy make sense for you? Does it make sense for you? Or how are you thinking about, I think we're going to be living in a future where, Bitcoin's not going away, the financial system's not going away. Like, where does Ethereum fit in that model for people?
Yeah, for sure. So basically, I think that Bitcoin is obviously the OG and opened up this whole design space of the Internet of Money, and I think it's really cool that in the Internet of Information we figured out how to take information and send it across a computer network, and everything that we relied on information in society was changed because of that. Newspapers, politics, entertainment, and now we've got the ability for computer networks to send financial value across the network and without an intermediary. And so anything that relied on financial value in society could maybe change because of the Internet of Money. And I think that Bitcoin really proved that out as a viable thing, and the security model of Bitcoin is really, really elegant. Ethereum, I think, because it's programmable, allows us to create new assets in the form of tokens that didn't exist before. So whereas Bitcoin has this store of value, with Ethereum, you can sort of program any sort of value beyond just like, Bitcoin has BTC, but in Ethereum, there's hundreds of thousands of tokens. And, and I love Ethereum, but a lot of them are shitcoins. A lot of them will never have any value at all, but there are some of them that are going to be completely upend industries, just like, the top 10 websites, Yahoo, CNN, Google are changing the world, but there's a lot of GeoCities sites out there that no one really cares about. And so, I wouldn't lose the forest for the trees. I think there's going to be some Ethereum-based assets that will change the world, but there's going to be a lot that aren't even worth paying attention to, just like with websites in the regular internet.
Yeah, maybe let's unpack that. How do you tell a serious project? So you said a lot of them are quote, shitcoins, or these are tokens or units of value that people probably don't want to hold long term. When you look at projects, how do you know that one is worth your time?
Sure. Well, I'll have to tell I'll have to provide the disclaimer that I'm a really bad trader and investor. I'm a much better software engineer than I am a trader and an investor. So you probably don't want to rely on me to figure out which assets are worth your time. But one of the things that I've seen some of my friends in the ecosystem really follow is what are the smart developers really excited about? What are the what there's this sort of like truism in Silicon Valley, which is what are the smartest developers in the room spending their nights and weekends on, because that's what the rest of the world will be spending their business days on in the future. And so I've been sort of really following the ones that have a lot of development activity. I think that that's a good leading indicator for where value is accruing. And that maybe that's just my bias as a software developer, but I tend to think that the smartest software developers in the room is a good indicator of what project is actually going to take off.
Yeah, I think I would come away from the DeFi summer of the last year with some questions, and I think as
Yeah,
someone who's kind of been more of a skeptical observer, it seems like Ethereum is introducing a lot of new ideas, and in contrast to Bitcoin, which I think has a little bit more of a clearer narrative here. With Ethereum, you have this
yeah,
idea that there are going to be base layer blockchains, quote unquote, that are platforms for you to build things on. We sort of
yeah,
had this emergent class of software protocols that you could say were combinatorial. They used multiple crypto assets to perform a
yeah,
service. And then we built applications on top of those that had their own token that served that infrastructure of protocol for services. Like, how do you explain that stack? Because it seems that when we put those blocks on top of each other, they fell over kind of quickly and often in pretty entertaining ways. But what did we learn from that experience?
yeah, for sure. Well, one of the powerful things about Ethereum is this idea of composability. I think money Legos is a meme in the Ethereum space, and the idea is that I'm a software developer myself. If you couldn't tell by the long hair and the beard, but when I walk into a hackathon, if I walk into ETH Denver 2021, then I could basically out of the box, I have access to Chainlink oracles. I have access to Maker, which means that I can now use stable coins. I have access to CDI, which is basically a stable coin which accrues interest when you put assets into it. And so there's this idea that you have these money Legos when you're starting a project that you could kind of stand on the shoulders of giants. You could assemble these blocks, and sometimes you could assemble them into something that will be completely world changing and will be a really good idea. But a lot of times, the first time when I was a kid, I got a Lego set and I put something together. It was not a very compelling thing that I built, no matter what my parents told me.
Mm.
And so I think that you basically have this opportunity to kind of start on third base with the Ethereum space with all of the money Legos that are out there. But that doesn't mean that every single project that's built with money Legos is going to be a good idea, and it doesn't mean it's going to be something that's really well executed. But it is going to mean that we could fail a lot faster in the Ethereum space, because a project that would have taken $50 million and 1,000 people for a bank to do 10 years ago, a group of scrappy hackers at a hackathon could do by starting on third base with money Legos.
Yeah, that's interesting. I guess what would you say? I think there's this idea that Ethereum was putting out there that we need multiple layers for the blockchain and we need multiple coins.
Yeah.
What's a good example of something that you would say, this is why we need multiple coins and why we need something like Ethereum, and this is why this works.
Yeah. Are you talking about the scalability roadmap for Ethereum, like multiple layers, like layer two, or?
No, I think this question was more about, we're seeing these kinds of coins or services, like, combine multiple coins together, right? We're
Yeah.
seeing things where, you'll have something like a Wi-Fi, which says that you can, use these different
Yeah.
types of protocols that themselves use multiple coins. I'm just trying to kind of grasp for, let's say
Yeah.
somebody's new. They're hearing that Bitcoin, is a store of value and that it's competing as
Yeah.
money. And then we have Ethereum, where there's all these kinds of different kinds of assets. Like, what's an example of something where you're like, okay, this is why this really works, this is what the conventional system doesn't provide, and this is why we need
For
this.
sure.
Yeah.
Yeah. Yeah. So, I mean, I think that you brought up Wi-Fi, so maybe I'll just run with that a little bit. One of the things that we saw during the DeFi summer this summer was basically this idea of yield farming. So basically, there are these token economic systems that were released where if you took X action on their platform, then they would reward you with yield on those token systems. And like CDAI is an example of that. So basically, you put your DAI, which one DAI equals $1. You put your DAI into CDAI, and you earn 3% interest in exchange for putting your money into that system and staking it in that system. There have been a sort of plethora of yield generating assets that have emerged in the Ethereum space, and as opposed to the fiat world where yields would be 0.25% in my bank account, the yields in the DeFi space were on the order of single digits or maybe even double digits depending on the project. And I don't want to oversell it. Sometimes the risk correlates with the reward there. Sometimes there was asymmetric risk reward profiles. And one of the things that was really neat about Wi-Fi, which stands for yield farming, I'm pretty sure that's what it stands for, is that you don't have to follow every new yield generating asset out there if you just buy Wi-Fi. So basically Wi-Fi is basically an automator of yield farming. So you just hold Wi-Fi and you don't have to spend any more time following all of the different yield generating projects that are launching in the Ethereum space. Instead, you could just hold Wi-Fi and it would aggregate all of the yield that was being generated in the Ethereum ecosystem. I think that's an example of a money Legos system that sort of makes it way easier for the end investor to participate in the upside of this ecosystem, but without having to spend a lot of time working on the ecosystem. And I think that's kind of why you've seen Wi-Fi take off over the last 6 to 9 months, however long it's been around.
Interesting. Yeah, I'll take another example there. Let's just say a decentralized exchange, right? So on Ethereum, we have this concept that, there's exchanges like Kraken, and then, there's these new types of exchanges, which are essentially, nodes running a software to now lock assets and contracts, therefore creating a sort of inventory of coins. They're reimbursed in a new coin for offering this inventory, and then someone can kind of take the other side of that trade, by buying or selling those on the back end, right? So we have these kind of decentralized exchange systems. How does something like that compete against a centralized exchange, like in your mind? Like, right? Why do we need this? They're essentially both doing the same thing, offering coins for buyers and sellers. Why do we need the decentralized model for it?
Yeah, well, so I'll have to again provide the disclaimer that I'm not a very good trader, and I have a computer science degree and not a degree in finance. So take my answer with a grain of salt. But I mean, I think that basically the trade-off that you're getting with decentralized exchanges is that no one has to have custody of your assets. If you're going to trade on a decentralized exchange, if I go to Uniswap, which is one of the top decentralized exchanges in the Ethereum ecosystem, I could basically make a trade where the money leaves my wallet, and in an atomic transaction, I get the tokens from the counterparty, and I never have to deposit my money into an exchange and risk and have the risk of getting doxxed we call it doxxed in the Ethereum ecosystem because there was this exchange Mt. Gox back in the day that lost.
Showing your age there with that one.
Yeah, exactly. But I forget how many Bitcoin were lost by.
It was like 700,000.
Yeah.
Plus. Yeah, it was a lot.
And obviously that's not a concern with a really legitimate exchange like Kraken. I know that you all take security really seriously. But the sort of nice thing there is that you never have to put your assets on an exchange, and then basically, but like the trade-off there is that it's more expensive to do a trade on Uniswap than it is on Kraken. I think that I could deposit my assets into Kraken and then probably trade way more of them because there's no blockchain fees being incurred in every single trade that I make on Kraken. So it's just a matter of what your preferences are and whether or not you want to deal with someone else having custody and maybe the KYC requirements that come along with that, as far as I understand it. But again, I'm a computer scientist, not a trader.
Yeah, I thought that was one of the more remarkable things this summer, when you were able to put your funds in these projects, you were able to kind of generate some new coins. But even when they blew up, you didn't actually face any loss, right? The coins were kind of still in your wallet. So I guess that supports your fail fast theory.
For sure.
That's helpful there. Well, let's come back to Gitcoin. I know that you've got this round coming, the 8th round that you've done. What kind of projects are you seeing? Like, what's the variety, and is there any that you're super excited about just personally?
Yeah, for sure. So Gitcoin Grants is sort of the flagship product of Gitcoin. And basically what we're doing is we just want to make sure that the digital infrastructure in the Ethereum space is funded. And so, one of the really hot things right now is ETH2. The ETH2 deposit contract just launched a couple weeks ago. And so teams like Prismatic and Nimbus and Lighthouse are all raising money on Gitcoin grants and have been for the last 2 years. And that sort of augments the funding that they're getting from the Ethereum Foundation to build the next layer of Ethereum. For those of you who are new to Ethereum, ETH2 is the second version of ETH1. Sort of assuming that people can infer that from the name. So that's like an example of an infrastructure layer grant that is funded by Kraken's generous 150K donation to the Gitcoin Grants project. But we also have dApps that are built on top of that infrastructure that are being funded by Gitcoin grants as well. And so, one of the things that I really love doing is just seeing what new innovative ideas people are coming up with on Gitcoin grants. And the cool thing about Gitcoin grants is that if you sort it, if you take a look at the leaderboard of Gitcoin grants, you're not just looking at the projects that like insiders think are cool. You're looking at the projects that everyday people in the Ethereum ecosystem think is cool, because Gitcoin grants optimizes for the number of people who are supporting a project, not just how much money they're getting from rich people. And I think that it's really kind of neat to see what my peers in the space are excited about, because I think that that's how we're going to see what's trending and what the next hot thing is going to be. We have graduates of the Ethereum of Gitcoin grants like the one inch exchange and Samsung, these people who've provided immense value to the space. And I'm super proud that Gitcoin is becoming sort of like a signal for what projects are going to be up and coming in the Ethereum space.
Yeah, very cool. Let's end on talking about ETH2 for a second. Just
Sure.
obviously that's a pretty big development, right? Ethereum is in the midst of executing probably what most people would say was one of the most ambitious points on its original roadmap, which
Yeah.
essentially is switching out the entire engine by which the actors within its distributed network interact and how they're rewarded. I've sort of taken the lens on this that if Ethereum does succeed on this, it's pretty groundbreaking, right? We certainly haven't seen anything comparable to the scale which Ethereum is, essentially transitioning its economy from one computer network to another computer network. What gives you confidence in that process, and why are you optimistic that is a transition that Ethereum is going to make and then succeed on?
For sure. So I mean, like, if you just look at it from a computer scientist's perspective, there's this thing called the scalability trilemma, which basically says security and throughput and scalability. That's like the trilemma, and you can only pick 2 out of 3 of them. And so I think that one of the things that like Ethereum rightly gets ragdogged for is that it's not very scalable right now. So basically, we didn't really choose throughput as a design principle. And one of the things that really makes me excited about ETH2 is that we've introduced this idea of sharding, where basically instead of having one blockchain, you've basically got several different blockchains that are interoperable with each other. You can yank assets from one blockchain to another, and that's going to allow Ethereum to scale. And so I think that if you want to compete with Visa or MasterCard, then you just basically have to be able to do more than 15 transactions per second. That's just, that's just from first principles, something that we're going to be able to do, or sorry, that we're going to need to be able to do. And I'm sorry, the scalability trilemma, I think I said throughput 2 times. Decentralization, security, and throughput. And so I think that, we've seen a lot of Ethereum killers launch in the last. Ethereum killers is like a name for a project that wants to usurp Ethereum as a base layer, an economic base layer. And I think that Ethereum is the only project that's really taking seriously the idea of being both decentralized and scaling its throughput. And I think that sharding is the way to do that. The thing that gives me confidence that we're going to pull it off is the quality and the caliber of the research scientists that that is being put into that, and how seriously they're taking formally verifying the security of the system. But I could sit here and tell you that it's a sure thing. I just don't think that this kind of project has really been attempted or pulled off before. So I don't think that I could 100% tell you that it's a sure thing, but it is a freaking ton of upside if we can solve the scalability trilemma and bring Visa level transactions to a decentralized network. I think that would be huge.
Well, certainly one of the upsides of being in a young industry, you're always seeing something historic or new. Well, thanks, Kevin. I appreciate you being on. And where can people find out more about Gitcoin?
Yeah, so we finally reached the level of legitimacy where if you Google Gitcoin, it will not be autocorrected to Bitcoin. So we got that going for us. If you Google Gitcoin, you will find gitcoin.co, which is our website, and then twitter.com/Gitcoin, which is our Twitter presence. And we will always be tweeting about how to make a better world for software engineers. So if you are a software engineer and you want to learn how to get coins, how to work for the open internet, that is our jam. That is what we're working on. We'd love to hear from you.
Awesome. Thanks, Kevin. Thanks for being on. This has been a special edition Kraken live stream. I'm Pete Rizzo, editor-at-large for Kraken. You can find more great Kraken video content on the Kraken YouTube, our LinkedIn page, Facebook page, and Periscope. We'll see you next time. For now, happy trading.